Can we expect to see these kind of M&A levels in these regions continue to decline?
I fear so, yes, unfortunately.
And is that a trade war symptom, or is there something else kind of going on here?
Well, I think there's lots of factors here. One is we have this political overlay, so you're absolutely right. It's having a chilling effect on M&A, mostly in Europe and APAC in terms of their appetite and their ability to compete in the US market. So if you look at those US volumes, most of that's domestic M&A. So I think we're seeing the emergence of large cap, very large deals getting done, sometimes poorly received, sometimes well received. But most of them are domestic to domestic. So we see, I think, 28 large elephant deals over $10 billion. Of those, 25 this year have been domestic to domestic. And even of those 3, I think one of them is Canadian. So we have a very, very shy corporate America about entertaining a bid from a European or an Asian buyer.
By the way, if the U.S. is the only market that's really up on M&A this year, how sustainable is that? Do you think that they're going to keep on propping up the M&A market globally in the next year?
Great question. So we see a lot of money waiting on the sidelines. There's a lot of money with private equity. The sovereign wealth funds, the long-term investors have raised a lot of money and have easy access to capital. So we have some very, very cheap money available, and I think most commentators expect that to get even cheaper. So we see money available. We see multiples creeping up. We've seen, on average, I think, deals done in the industrial space around 10 times EBITDA 5-6 years ago, creeping up to 13-14 times EBITDA in the current environment. So that means we're seeing people stretch for deals because there's a lot of money available, but paradoxically, not necessarily being as well received because there's a sense that maybe we're slowing down from a growth perspective. So people are trying to chase growth. We're not so sure the market's giving them the benefit of the doubt, though, when they pull the trigger.
By the way, we're also seeing, $30 billion of debt raised by American companies just yesterday. How are investors perceiving that? Are they putting that money to work, especially for M&A, in the way that investors want, or are we kind of hitting the end of the road here?
It feels like people are raising money because it's available. It feels like people are raising money because maybe they need to be aware of what they may be getting into towards the end of the year, beginning of next year. It seems a little defensive. Clearly, people will pick up dislocated opportunities where they can. But we do have the drumbeat of share buyback rather than M&A, and that's resonating in the corporate boardroom. So people are being opportunistic with respect to the financing markets, but I think being very, very circumspect about what M&A target they pull the trigger on.
So you worked on the Syngenta ChemChina deal. Could that deal happen today?
Tough to see. It was a team effort, but it's tough to see that happening in this sort of environment. I think there was a very large Chinese buyer for what was a Swiss asset, and we see the Chinese buyer very cautious for their own reasons, but also aware of the dynamic here about stepping into any sort of boardroom, any sort of large situation. It was a $43 billion deal. We advised Syngenta on that, but I think it would be very tough to see a Chinese buyer stretching in that way and being well received.
Even beyond M&A, what about capital raising? We see these huge Hong Kong companies listing in Hong Kong nowadays. How much do they want to list in the U.S. versus Hong Kong?
Well, again, same syndrome, I think. We were seeing 4 or 5 years ago, we were seeing large Chinese companies seeing the New York markets, the deepest capital market in the world, as a very attractive place to raise money, prepared to accept some of the corporate governance environment and regulations. Now, I think we've seen that dial itself back. If anything, some of the Chinese capital raisings are being done closer to home. Not so sure we can talk specifically today about Hong Kong being the ideal place, but it is certainly the case that the regular throughput of Chinese company into our offices and many others looking to raise money on the New York market or in the New York market has dialed itself back.